All right. Today is Wednesday, the 27th of March. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. We welcome all viewers to the show because this video is public. And the reason is it could be the last video of the week, the last video of the month. Meaning no show Sunday. Unless, of course, something crazy happens tomorrow, then we're going to have a show on Sunday. But absent of that, today perhaps was the last trading day of the month. We do have tomorrow, but nobody's going to be there. It's probably going to be a low volume day. Although there was an interesting twist at the end because Friday we get the PCE inflation rate. So before the close, we might see some interesting moves. As we've seen today right before the close, due to the rebalancing at the end of the quarter. So I'm going to be off tomorrow unless, of course, something crazy happens. Then I'm going to hop in Discord and say, hey, folks, I see an opportunity here. I see an opportunity there. Here's a trade. You know the deal. Absent of that, your boy's gone. I'll be catching up on some gardening instead. I'll show you some of my progress so far. So here you got the grapes beginning to sprout, looking beautiful. We're going to have some grapes in the summer. Then you got the grapefruits. Those are beginning to come out too. Need a little work though. Then you got the strawberries. Those are coming out already. A lot of folks say you can't grow them in Vegas, but here it is. And then we have the blackberries. Those are going to take time though. Then we got the dwarf Washington navel oranges. Those are about to come out. Then we got the figs. The leaves are coming out. Spring is here, baby. And of course, we can't do without the peppers. Then we got the eggplants. I love to use those to make lasagna in the summer. You can't make lasagna without tomatoes. So we got the tomatoes going on too. And then last but not least, we have the Armenian cucumber. It does pretty good in the heat. So yes, we're in the desert, but you can grow stuff here. I got some peaches. I got some pomegranates. I got a lot of stuff. So we'll be doing some gardening tomorrow. Catch us in the Maverick Wall Street Gardening channel. But even though we don't have an official episode, we'll see what happens tomorrow. But for now, we're not going to have an episode this Sunday. But we have some bonus videos coming your way. Friday, I'll be off too because I have an MRI and chest x-ray. Go figure. And then Saturday, we're going to do the portfolio review. We added some names this week and the past week. This is usually a perk for the VIP and the Top Gun members, but we're going to include the first class members from Patreon as a sign of appreciation because we want to diversify away from the evil empire of YouTube. And Sunday, if everything goes according to plan, no official episode, but we're going to do March Madness, Stock Market Edition. And this is going to be members exclusive, baby. Not to mention, of course, the real March Madness. Tomorrow, we got the boys from San Diego State. Let's hope for revenge against UConn. I went to a lot of colleges, but I ended up graduating from San Diego State. It's a good school, but it has a skanky reputation. The kind of school where you graduate with a major in business, but a minor in herpes. I think at some point we had an epidemic of airborne gonorrhea. It's that kind of school, but let's see if they're going to do good against UConn tomorrow. And then, folks, Monday, we have a public video coming out. Free for everybody, but it's going to be Patreon exclusive. All you got to do is just go down to the description of the video. You'll find the link on Patreon. You become a member for free. You don't have to pay a damn thing. And you're going to watch this video on Monday. You'll be amazed that there was one company that single-handedly lifted up the revenue for both Meta and Google last year. But now this same company is pulling back, which will impact the revenue growth for both of these companies, and even the executives, including Zucchiniberg, were caught joking about it. Maybe it explains why the man has been dumping stock like there is no tomorrow. So we're going to cover that and also the future of the advertising business. How is it going to hold in a recession if the economy weakens, if we see spending going down, etc., etc. So again, to recap, off tomorrow, off Friday, then Saturday portfolio review, Sunday March Madness, Monday we talk about Google and Meta. Then comes Tuesday, we're going to be back on track per usual. But we have a few things we need to cover here, folks, before the end of the month. What you've seen today is perhaps the end of the quarter rebalancing. The question now becomes, where do you go in the stock market? Because we know that technology, chips, / the AI mania, the gains have been already exhausted in that corner of the market. We have alarming trends, folks. For example, momentum stocks, we're talking about technology, chips, AI mania, are outperforming the S&P 500 by the widest margin. since the year 2008. Good times. So this is a sign to be concerned about what's going to happen later on. And the reason is when these names slow down, with their huge weighting, you have to understand that they're going to take the indices down. So when we talk about the rotations and what do we see in the next quarter, we know that the technology chip/AI mania trade is toast. But with that, if we see corrections in these trades, the weighting of these names will drag the indices down. So perhaps SPYQs, that's a no-go for the next quarter. That doesn't mean that we're not going to find opportunities in individual corners of the stock market. But now the question becomes, where do you go? We have two schools of thought right now. You can rotate to the inflation trade, or you can rotate to the soft landing trade. However you believe, whatever you believe. You see, today the managers decided to go with the soft landing trade. So we've seen rotations into financials, regional banks, small caps, retail, real estate, biotech, industrials, and travel names. The assumption goes by the managers, hey, we have to trust the Fed. Whatever the economy does, at the end of the day, the Fed will do what they're saying they're going to do. If they say they're going to cut rates, then we go with a soft landing trade. I'm not a fan of that. I think that the Federal Reserve has unleashed the second wave of inflation. We're seeing the beginning of that happening right now. And I wish that we had some balls like the Poles, because in Poland, the ruling coalition is now asking for the central bank chief to be tried over hurting the state's interest. You know, if we put Jerome Powell on trial for crimes committed against humanity, maybe that will send the signal to the next Fed zombies. Maybe you should put the interest of the people first, the interest of the country first, not the interest of the oligarchy. But the damage is done, and this is why I think that the inflation trade makes more sense to me. And under the inflation trade, energy, metals, industrials, not all of them though, specific corners, we'll talk about some of those in a minute. Staples, healthcare, packaging, trucking, home improvement, auto parts. And if you've been watching today's activities, technology, the chips, the AI mania was the laggard. Now, we might see a rebound tomorrow in that corner, but the message is clear. Then we've seen the majority of positive activities happening in these two trades, pretty much equally. I would say a slight advantage to the soft landing trade. We've seen more inflows into those sectors, but the inflation trade did pretty good today. So this is going to be the battle from this point on. Will it be the inflation trade or will it be the soft landing trade? I think you know where I stand. I think the inflation trade is the one I want to go with. But let me know in the comments section, what do you think? Where are you going to rotate next quarter? You're going to be in the inflation corner, soft landing corner, stick with technology, stay out of the market entirely? What are you going to do? Let us know in the comments. But with that out of the way, let's do the morning brief from Discord today and revisit some of the ideas from the morning. Now, this might be hard to see, but I'm going to read it for you, so just keep your ears open, and here it is. Good morning. While the market tries to rebound in the pre-market session, the downward pressure will remain after the open unless the SPY makes it above 522.06. I will continue to watch Apple and NVDA as my indicators. If they remain weak after the open by, say, an hour, then the pre-market rebound will fade. And this is exactly what happened, folks. Apple was stronger, but NVIDIA was weak. So we've seen the SPY flushing down initially. Then in the last hour, we've seen the inflows and the rebalancing, and the SPY moved higher, closing above 522.06. So do we go with that? That is a confirmation that higher we go since we closed above 522.06, or was it just a one-day wonder because of the rebalancing? We'll talk about this in the charts analysis, but for now we have other ideas to cover. In the meantime, I have a few charts I'm eyeing for both my investing and trading portfolios. Apologies for not getting the portfolio review video for you this weekend, but as you can see, I'm still not finished with my moves for the next quarter. Few ideas. WHR, this is for Whirlpool. We're getting data that manufacturers are regaining pricing power in the market. So we talked about this when we covered the manufacturing PMI last week. Activities in the manufacturing sector is moving higher, and the manufacturers are able to pass the increase in input costs down to the consumer. So they're now exercising the pricing power. And the latest piece of data that we got is durable goods, and here it is. Durable goods orders rebound and business investment rises. Listen to this. Orders for big ticket items climbed 1.4% in February. Are these faint signs of a manufacturing revival? The answer is yes, but the better question is, are these faint signs of goods inflation revival? See, the media will never ask these kind of questions because You're not allowed to talk about inflation right now since we have an election year. You think manufacturing will just come back without causing goods inflation? Think again, buddy. But we go back to the morning brief. This is why I want to add WHR to my portfolio. Not to mention the attractive dividend of 6% plus. On the weekly chart, I see a potential for a double bottom, with a confirmation of a close above the weekly 20 MA. Here's the chart that I gave you in the morning. You can see that we maybe have a double bottom. You read the data from durable orders. You see the improvement in the financial data from Whirlpool. And you put two and two together, you got to take the risk here, specifically when you have a really good dividend at about 6%. And by the way, the short float in the stock is about 16% or so. So we might see even a short squeeze in this name. Well, here's the update. Whirlpool made a big day today. Huge gains, but 5% for the session. And now it closed above the 20 MA. I mean, technically, we still have 1 day left, but it appears as a solid closing here. So we're going to stick with WHR. Then we have KTOS. This is a defense contractor. Looking at the weekly chart, the name has potential of producing a double bottom formation with a confirmation of closing above the top of the most immediate breakdown candle. That'd be 1861. I am willing to buy shares here while I wait for confirmation, but also with using a tight stop loss order. Here's the chart that I gave you for KTOS, Kratos Defense Security Solutions. You can see the potential, keyword potential, of a double bottom on the weekly chart. It has a long way to go to prove that it is a double bottom, but if you take the shot for now and you have a tight stop loss order, what do you got to lose? Here's the update. We get a nice upside day. If we have a continuation of that theme, then I think that we have a double bottom and higher it goes. Then we talked about ETN, Eaton. I'm looking to add this chart to my short portfolio today. On the 1 hour chart, I see a gap down and a failure to close the gap at 316.39. A confirmation of failure will be closing on an hourly basis below 31.46. If we get this today, I'll short shares with the name with the target of revisiting the 20 weeks moving average. Now here's the chart that I gave you for ETN hourly chart. Can we argue a double top? Can we argue failure to fill the gap? Can we argue a lower high on the hourly? We can argue all of that. If we have a closing above 316.39, then the trade goes out of the window. If we got a close below 311.46, then we stick with it. Here's the update. We did close below 311.46, but then came the rebalancing and the stock went higher again. Where do we stand with Eaton right now? I am still short. I did take a short in the name, but every time you take a shot against a momentum name like this, you always have to short with an insurance policy. And that insurance policy is a married call options trade. That's your hedge. If it goes the other way, the calls will protect you and give you an exit strategy that maybe your timing is wrong. You can try again, but it wouldn't cost you. We'll give it the benefit of the doubt. I think that we have some pop from the rebalancing, but I think that we're seeing signs of peaking here, signs of exhaustion in these momentum names, and in industrials we can look at Eaton as perhaps one of the top momentum names. We go back to the morning brief, and this is really important because we're talking about how we use different time frames. Then a few trading ideas today. I'm looking for a midday failure, so stocks that will open higher to resolve oversold conditions on the hourly chart, but yet their outlook on the daily remain negative. We have RNG ring central on the hourly chart. The hour size very oversold and had support around 34. But on the daily chart, we see a confirmation of weakness by the loss in momentum in the MACD and the loss of the 20 MA. I want to see this name rebound initially, then fail, and that will be the point when I initiate a put options trade against it. Now, here's the chart for RNG that I gave you in the morning, a daily chart. You can see the loss in momentum in the MACD. You can see the loss of the 20 MA. So if you look at the daily chart, you'd say, down we go. But then you look at the hourly chart that I gave you, got support at 34, really oversold in the RSI. Can we get a rebound, fix some of the oversold conditions, then come down? That's the idea, and here's the update. Ring central. You see the pop higher. We never got a reversal after that. So for now, no trade on it, but say we go down tomorrow, we lose 34, then we got a trade against it. The one that did work out, at least for the majority of the day, is Uber. On the daily chart, we see loss in momentum accelerating on the MACD. We have loss of the 20 MA. On the hourly, though, the chart is oversold and has support at around 77.85, resistance at 79.10. If we see closing above the resistance from a 1 hour time frame, then we don't have a trade otherwise. If there is an initial rebound, then failure. At 79.10, then the chart appears to head down to break support, then I will initiate a put options trade against it. So here's Uber, daily chart. What do we see here? Loss in momentum in the MACD indicator, loss of the 20 days moving average, so we have negative patterns, and one could assume that we go down to the lower Bollinger Bands, let's say around 75. Here's the hourly chart that I gave you. If we have an hourly closing above 79.10, okay, no short. It means that the chart is improving. If we have a failure before 79.10 and we head down to 77.85, then the odds say that we're going to break below that number, so we have a trade against it. Here's the update. You can see the failure right before 79.10. Then we see the flush down and we lost 77.85. Only to recapture it by the end of the day because of the rebalancing, but I think the trade is working in our favor right now. And if we see a loss of 77.85 again, a closing below that, let's say on an hourly or daily basis, preferably daily, then we have more of a confirmation that we are on the right track. But we didn't stop here, folks. At around 6:45 Pacific time, I said I'm closing the NVDA trade initiated yesterday for about $3 or a 200% gain. The stock can head lower, but with the expiration tomorrow. Decay could be big by any rebound. I'm happy with the gains, so I'm out. This is the trade we're talking about. Yesterday we said we go with the 900 890 puts, expiration date this Friday. Now while I sold at $3, I'm satisfied with the gains, but we looked over it again when we did the live stream for the Top Guns today. The contract was worth about $500, so you could have made 400%, but again, making 200% in a day is nothing to sneeze at. So that was that, and then 6:54 a.m. I said I'm also going with the SPY 520 Lotto with the expiration date of tomorrow. The entry cost is about 83 cents a piece. This was the entry for the SPY. If we look at the 1-minute chart, gave you the update a few minutes later. SPY Lotto closed at $1.50 a piece. In, out, hello, goodbye. Wake the fuck up. Because a lot of you come to me later on in the day when we have an hour left. Hey, Maverick, any scratching your face? You just woke up. Any trade today? Yeah, we're already done. We wrapped up the day already. We're finished. Here was the exit. Pretty much spot on because after that, the market did stabilize and they rallied higher into the close. And again, I'm going to be off tomorrow, so I have to take care of you folks. And I know that we have some trades open for tomorrow's expiration, so let's do options tracker, baby. And here it is. These are the trades that we initiated for the month of March. Any trade that we held over one day is right here. In green, the ones that we won. In red, the ones that we lost. And in black, the ones that are still open. So let's go over those and see what's going on. MDT Medtronic, 86.5 calls with the expiration date of April 19th. Now, if we look at the daily chart for MDT, huge pop today. So that validates that we're onto something here. And the idea is I already own the stock from last year, but can we add to the shares at around 87.5 if we have a closing above by April 19th? It appears right now that we're heading this way, and if you look at the weekly chart, all in all, we can see a larger inverse head and shoulder pattern. So I want to stick with this trade. I think it's going to be a winner, so we'll keep it as it is. Then we have Snowflake, the 170-180 calls with the expiration date of March 28, meaning tomorrow. Now, unfortunately, this is probably going to be a loser absent of a miracle tomorrow. The chart is oversold, finding some footing. It will change momentum from bearish to bullish really soon. The question is, do we have time by tomorrow's expiration to be above 170? The answer is probably not. Even though Snowflake after the bell is up about 3%. I'm not sure what the news is, but it's at 165. So it can go higher tomorrow. I'm just not sure it's going to be at 170 or above. So when you have a situation like this, all what you got to do is, if you still believe in the trade, hold your nose, reinitiate it for a longer expiration date. Then we have the IYR 87 puts, the expiration date of March 28 yesterday. It looked really good. Today, the trade is toast. Done, over, no hope, because the IYR was up by about 2% for the session. We'll look over the IYR chart in the charts analysis, but for now, I'm assuming this is toast. It's going to be a loser when we close tomorrow. Then we have now, ServiceNow, 730, 700 puts with the expiration date of April 19th. If we look at the weekly chart, we still have 3 weeks. Can we, in 3 weeks, go down? We lose the 20 weeks moving average. And we hit south of 700. We see a loss in momentum in the RSI and the MACD, so the trade still has potential to play out. So I want to leave it as it is for now. Then we got GS, Goldman Sachs, the 410, 420 calls with the expiration date of tomorrow. So we have a decision here that we have to to make really fast. If you look at the chart, Goldman Sachs daily chart, the idea was we're going to pop out of this energy release consolidation range. We did pop, maybe right now forming an ABC pattern. We are trading at about 415.25. Can we do 420 tomorrow? If we do that, I'm just going to close the trade as it is, book the profit, which is going to be in the range of about $10, and that's that. Now, if we close, let's say, anywhere above 412.66, but not quite above 415, then I'm going to debate whether it is worth it to exercise the options and own shares of Goldman Sachs. I'm hesitant to do so because the technicals in the name are really overextended. So I'm leaning toward closing the trade. Hopefully, we get a pop out of it tomorrow, and it closes above, let's say, 419, but below 420, that'd be ideal. Or even 418, that'll do the job. I will just book the profit here and move on. Then we have PANW Palo Alto, 310 call spread with the expiration date of April 5th, meaning next week. I don't think we have a lot of hope here. If you look at the hourly chart for Palo Alto, huge rejection candle off the, let's say, 290 resistance for now. I just don't see how we're going to make it all the way to 300 and above by the end of next week. So if you want to book the loss here, that's your call. For me, I'll keep it as it is as a wild card, maybe. Who knows, Palo Alto will find a catalyst and gap above 300 at some point next week. We'll keep it as it is. At least that's my call. For you, maybe the call is to book the loss. You still got some value in it, so it's up to you. But then we have a few lotto tickets that we bought for the expiration date of tomorrow. So you got PARA Paramount, the 11.5 calls, expiration date tomorrow. Here's the hourly chart. You can see the MACD momentum is moving higher. And the hope is that we gap higher to the next resistance at around, let's say, 11.98. If we do that, we close the trade right away. This one has to be closed right off the gate. You book whatever profits, you get into it, and you move on. Because if you leave it as it is and it closes in the money, you're going to be obligated to buy Paramount shares. You really don't want to do that. And if you get a pop, then we see a flush down. By the end of the day, it loses value. So by the first hour, you got to book whatever she gives us here. And then we have F for Ford, the 13 calls with the expiration date of tomorrow. If we look at today, we've done a recovery. We're now above 13. The idea is if we go, let's say, 13.5 and above, then we just close the calls options or we book the profits. But if we close, let's say, 13.10, 13.20, I think it'll be worth it to exercise these options and own shares of Ford. With the bridge collapse in Baltimore, I think the company will use that as an excuse to do price gouging and improve their margins. So why not take advantage of that by riding the wave in Ford? Then we have Apple 170, 165 put spread. This is for April 19th. Yesterday it looked pretty good, not so much today. I'm going to blame it on Cramer, because Cramer in the morning came out and said that owning Apple will hurt us right now. Next thing you know, Apple is up about 2%. But we do have some bearish activities on Apple. We'll cover that in the options market, so I want to stick with this trade for a little longer. I might add to it beginning tomorrow. The NVDA trade, that's closed, and then we have the Uber, the 75-70 put spreads for April 19th. I think right now, we looked at the chart just a few minutes ago. If it works out the way we anticipate, we just keep the trade as it is. I think it'll be a winner. So now you know. I don't want any confusion in the morning. Maverick, you're absent. What are we going to do? Now you know how we're going to manage these trades if we have some of them. And the last one we have to talk about is formerly known as DWAC, Dwack the Quack, now DJT Donald Trump. Not quite an options trade. It was actually a stock trade from Monday. And the idea was we buy the shares at around 38 and then we sell covered calls on it. I sold the 45 covered calls. I netted about $1,000 a piece from those, so $10 a piece. Technically, I'll be selling all of my shares in DJT at the price of 55. Now, am I leaving some on the table here? Yes, I am. Am I upset about it? Absolutely not. And I think that if you have shares of this name, you really seriously want to consider booking your profits tomorrow because it's gathering a lot of chatter. And now a lot of folks want to short it. It's really expensive to short, but they're going to find a way to short it. And this name is going to be really political. So I would say we just be thankful that we got a gain out of it. In, out, hello, goodbye, dump it, goodbye. But I love how the media is so pissed off about this because this is a huge lifeline for the orange man. They thought they got him with that bail. 400 million plus. Oh, we're going to seize Trump Tower now. Then he comes out with a new trick up his sleeve, which is you have an entity in the stock market. It's a Ponzi scheme, really. You can juice it for cash. You and take an equity loan against it, now they can't seize Trump Tower. See, you're not rich in this country, folks, unless you have an entity in the stock market, because that's considered as unlimited credit. You might say, but Maverick, I'm rich. I got $50 million in the bank. You watch what they're going to do to you. They're going to accuse you of some sexual stuff and drag your ass to court. The $50 million will be gone in bail and lawyer fees, and then you're in the poorhouse. But if you have an entity in the stock market, and the Federal Reserve keeps pumping it, and then you have the Wall Street scam pumping retirees' money into it, and you have the dumb retail investors stampeding to buy it, you can use that as a cash cow. And your wealth is now unlimited. You're only rich in this country if you have an entity in the stock market. Otherwise, you're not really rich. But look at these headlines. They say that Trump made a lot of billions of dollars. But then they look at the last hour of the day yesterday when the stock went down. Oh, he lost $1 billion in the final hour. But he made a shitload of money with the stock going higher. He made more money than ever in his career. More than Trump Tower, more than the bullshit board game. All of the scams that he's done throughout the years, the TV show, this is the most money he's ever made. It's all fake money. It's not really real value. But welcome to the stock market. The point being, it's going to be political, folks. So not the kind of stock you want to own for now. Be thankful you made your VIG and get the hell out. Okay, let's move on to the market information, add some color to the conversation that we just had. And we begin with the closing of the indices today. And here we go. The diamonds in the green, and it was actually the best day of the year for the diamonds, up 477.75 points or a gain of 1.22%. The Nasdaq in the green, 83.82 points or a gain of 0.51%. The Spider also positive by 44.91 points or a gain of 0.86%, while the Russell 2000 small caps, the winner of the day, up by 4.47 points or a gain of 2.18%. The vast majority of the gains came in the last hour of the day. We've seen the rebalancing going on. You look at these sectors, all positive for the day, but led by utilities, real estate, and metals. The laggards, technology, and comm services. So you see the theme here. It appears that the managers are betting for interest rate cuts, and this is why they're going with utilities, real estate, and metals, because the dollar goes down, that's good for metals. But they're rotating away from tech and comm services. Now, the aggregate demand for these names is really high, so it wouldn't be surprising to me to see a rebound in, let's say, NVDA, these technology companies that went down today, tomorrow. I wouldn't be surprised. But I think this is a beginning of a theme, rotating away from the winners to other sectors in the market. Now the debate becomes, as we've talked about earlier, is it going to be the inflation theme or the soft landing theme? We move on to the breadth, really positive today because technology was down, but the rest of the market was okay. So we see the NYSE 86% advancing versus 13% declining. The NASDAQ 71% advancing versus 26% declining. Now, when we see such extremes to the upside, you're probably going to see the breadth pulling back tomorrow. Now, this could happen in two ways. An inclusive pullback. I think the only catalyst for that would be a scare before the PCE inflation report. Or shall we say the more likely scenario where we see the winners today pulling back, and we see a rebound in tech, the big caps, the chips, they move higher, but the rest of the market goes down, so the breadth goes down to, let's say, 50-50 or slightly negative. When we move on to the heat map, you can see for yourself right here, the majority of the market was doing pretty good. Huge gains in any sector other than technology. Be it banks, be it cyclicals, be it industrials, energy, utilities, staples, healthcare. But even within technology, it's really interesting that they're dumping the winners and they're chasing, let's say, the value / the laggards. So Apple is the outperformer among the big caps. Apple was the laggard. In the AI mania, we see NVIDIA, Taiwan, AVGO, ARM going down, along with Supermicro Computer and Dell. But then you look at the value AI, such as IBM, that's doing okay today. You look at the value chips like Intel, Texas, ADI. Those are doing okay. The gray area remains AMD and Qualcomm. Can we lump those into the value chips or the AI squad led by NVIDIA? I think they belong to the AI squad because they're overvalued right now. I think Intel perhaps the only value opportunity here as the Joe B administration continues to pour in more and more cash on behalf of Intel, courtesy of the taxpayer, of course. But all in all, you see that the majority of the market is in the green, exceptions, some of the big caps, chips, Pinduoduo, and the Chinese names, Netflix, but everything else is doing better. Now, I think tomorrow we might see the opposite picture where the laggards today lead and the winners kind of pull back a little bit. But this theme that you see right here, I think this is going to be the theme that we take with us in the next quarter. But we have to pick the theme within the theme. Is it going to be the inflation theme, energy, metals, staples, healthcare, some of the industrials, or is it going to be the soft landing theme with the banks, regional banks, real estate, the cyclicals, and small caps? I think that's where the battle is going to be. But there is no debate that technology, AI, that's probably way too exhausted right now. It's the place where you're going to move out of. The question now becomes move into where? Inflation theme or the soft landing theme? If we move on to the heat map for the ETFs, you see the same thing here. So if we look at value, for example, IWD, that did pretty good today. Outperforming large cap growth, the IWF and the VUG. Value, usually a mid caps, kind of represent the inflation theme. A lot of the inflation names are within value and mid caps. The small caps, the IWM, which is the outperformer of the day, is a representative of the soft landing theme. Right now, you can see the battle. There is no decision. The soft landing theme with a little advantage today. So you see the XRT retail doing pretty good, the IYR real estate, the XBI biotech, the KRE regional banks. Now, does it make sense from a fundamental standpoint that now we have higher inflation data and probably we're not going to see rate cuts unless we have them for the wrong reasons? Does it make sense to chase the small caps and the soft landing theme? My 2 cents is no, and this is why I'm going to go with the inflation theme. But for now, it's a debate. And the more macro data we get, beginning with the PCE report, will decide who's going to be the winner in this theme. Now, of course, you could say, I don't care about any of this, Maverick. I don't care about inflation. I don't care about soft landing. I don't want to do any of this. What can I do right now that is safe? Well, how about the idiosyncratic theme of gold? See, gold doesn't give a shit anymore. Dollar goes higher, gold goes higher too. At least for now. Maybe there is a threshold where if the dollar goes above, gold is going to freak out. But for now, gold is moving higher. You see the GLD, the GDX miners, up almost 3.75% today. So if you don't want to deal with the headache of is it going to be the inflation or the soft landing theme, you can just stick with gold and have the comfort of mind, because we are in stagflation right now in the economy, and gold is a really good bet for stagflation. We move on to commodities. So the dollar was flattish for the day, no guideline. We see mixed action across the board. Energy was flattish for the day. The exception, of course, natural gas is the weaker link. It is down yet again by about 4%. We'll look at softs. What's new? I think we're going to close about 10,000 here in cocoa, up yet again about 3%. And we have coffee up about a little over 1.5%. The laggards, though, we have pullbacks in cotton, lumber, OJ, and sugar futures. A little on the steep side for cotton futures, but you got to understand this comes on the heels of a big rally. Metals muted, but the precious metals is where we're gonna be here. Gold, I would favor gold over silver by a lot, but copper is not bad either. Usually you'd think about copper as the cyclical, maybe we have a stagflation or a recession. Why would you go with copper? But you gotta understand part of stagflation is inflation, and inflation is good for copper. When it comes to grains, we see mixed picture here, but wheat beginning to outperform a little bit, while we see pops in soybean oil, corn, soybeans, but they're not sustainable. They keep coming down. Wheat, we've seen some stability, so we have to monitor here. I think the problem is the dollar is not going down enough to prop up the grains trade. But now we have the bridge collapse in Baltimore. That could create a lot of shortage, and it might push pricing higher. So it's an important event that we have to watch for when it comes to grains, commodities, inflation. Let's move on to the big casino, the options market. What do we have here? The volume is slowing down, folks. It's going to go down even more tomorrow. I think the only wild card is the PCE report. How is that going to play out by the end? I think the thinking goes, yes, it is a risk. If it comes out hot, the market goes down. But we might just forget about it. It comes out Friday, then we have the weekend, and it might just get buried in there. And we wake up Monday, Tuesday, and the PCE has no impact at all. Maybe. But you have to keep in mind that, again, there is a risk coming from the PCE. But the assumption, volume will go down. For now, the volume remains hot for NVDA and Tesla, about 1.8 million contracts apiece. But we're beginning to see puts being picked up in NVIDIA. We're now getting closer to the 40% puts on the spread, and this is something we haven't seen in NVIDIA for a long, long time. Tesla, on the other hand, is beginning to improve toward the call side. So it's about 50-50 now, or about 54 in favor of calls. So maybe right now we want to go with Tesla, not with NVIDIA. If we look at the flows for the day, the bullish flows, we see MicroStrategy. This is a high roller casino table right now. It's even divorced from Bitcoin at this point. It's just options gambling day after day with huge amount of money. But then we have bullish activities for the ticker ANNX, LMT, Lockheed Martin. This is really interesting. For Lockheed, this is highly unusual. Somebody bought the 475 calls and they spent about $2.25 million on those. So it's a huge trade. What do they see? Is this Nancy again? I mean, who's buying these calls at this point, betting on a war. And then we have also for the ticker ANNX. This is for Annexon, biotech name. It is moving higher. Look at the chart. It is moving higher in a breakout. I think it has more juice to squeeze here in this breakout. So here we see the unusual trade, highly unusual, $3.5 million. Buying the 7.5 calls for the expiration date of July 19th. So this is noteworthy. Maybe they know something that you and I don't on Annexon. On the bearish flow, we see the E-mini futures, we see Apple, NVDA. What's really interesting is when we look at Apple, highly unusual. The 190 puts, expiration date April 19th. They spent about $5.25 million on this trade. So when I look at my trade against Apple and then the pop that we got today, I'm looking at this trade and I say, you know what, maybe I want to stick with the bearish trade for now, but tomorrow is going to be decisive action whether we keep it or not when it comes to Apple. This one is even crazier for Microsoft. It cost the trader about $29.5 million. Highly unusual. They bought the 430 puts for the expiration date June 21st. They also bought the 435 puts for May 17th. So bearish in the big caps, Apple and Microsoft, with huge volume and huge premiums being spent on these trades. Noteworthy? Sure. I think it adds to the evidence that we have that it is time to rotate out of these names, the Microsofts, the Apples, the NVIDIAs, and find some other corners in the market. Now, these are the trades by the whales. What about the trades by the peasants? Let's do the unusual activities that took place in the options market today. We begin with the ticker AA Alcoa, another inflation name. Somebody sees it going higher in a big way. They bought the 40 calls for the expiration date May 17th. The expectations, the name will pop higher and gain more than 20.5% by then. They paid about 70 cents a piece, standard. This trade, all in all, spending about $700,000. And then we have the ticker UBER Uber. This comes as a confirmation of the trade that we have. They bought the 67 puts, the expiration date May 3rd. Expectations, Uber will go down and lose more than 14% of its value by then. Paid about 70 cents a piece, standard. This trade, all in all, spending about $450,000. Then we have the ticker SMTC. This is really interesting because we have earnings coming out tomorrow. The name is Semtech. It was up over 10% today. Highly unusual. Somebody knows something here, and they're beginning to buy and stampede in buying the stock before the catalyst. Now, the question becomes, whatever this catalyst is coming out of earnings, is it already priced in? I don't know. Not at least according to this trader, who sees more gains to come. They bought the 32 calls for the expiration date May 17th. The expectations, the name will go higher and gain more than 15% by then. Paid about $2.50 a piece. Enter this trade, all in all spending about $1.3 million. Last but not least, what about the SPY, the S&P 500? We have a put options trade on it here. Somebody's betting for downside to come, maybe fading what we got today. They bought the 485 puts for the expiration date May 3rd. Expectations, the SPY will go down and lose more than 7% of its value by then. Paid about 77 cents a piece. Enter this trade, all in all, spending about $400,000. Let's do some charts and then wrap it up. We begin with the SPY, the S&P 500, an hourly chart. What do we see here? The question now becomes, we have an island top, which is really strong, but we also have the inflows that came in at the end of the day. Was that just a one-day wonder because of rebalancing, or is it a sustainable theme? If you look at the MACD indicator, we're moving from bearish to bullish momentum. That suggests that higher we go. But can we guarantee that the inflows that we've seen today are not just a one-day wonder? We cannot guarantee that. But for now, we play with the technicals that we have. So long as we're above 522.06, the risk is to the upside. If we lose that, then we can argue that, okay, the island top stays. And if we lose 520.42, we erase the entirety of the move today. Then okay, we have more downside to come. But most importantly, folks, and this is what we talked about yesterday, whatever damage you see in the SPY, is it erasing the bull flag pattern or not? And the answer was not yet. And now you know why. We see the pop. Perhaps the bull flag is playing out. When do we know that the bull flag is over? The line is 515.77. We lose that, no more bull flag. So we talked about this yesterday. But traders keep doing the same mistake over and over and over again. Let's keep shorting the SPY, even though we keep telling you over and over and over again, you need all of big cap technology stocks and the chips to go down together by 2 to 3% sustainably for a few days. You need to see a lot of damage before you short the SPY. Now it's an individual stock game. And if you want to go long, you just buy the index for now with a tight stop loss. It appears as we speak right now that the bull flag is playing out. We lose 515.77. Okay, now we have a different outlook, but not until then. If we look at the E-mini futures hourly chart, what do we see here? We finally got out of this channel that's been going on and on and on. And we did a break to the upside. So first he got a false breakout. We fell down to the channel. And there was a lot of risk that we can go down in inverse ABC and we lose 5,257.25. We see more downside to come. But once again, folks, I give you these lines, the confirmation lines, but a lot of you don't listen. You're not going to short the E-mini futures until we lose at least 5,257.25. You can do intraday trades. Granted, we did one today against the SPY, but you gotta have your confirmations. Of course, look at what happened today. Broke above the channel, retested the upper band of the channel, and then we got a pop higher now, consolidating in a bull flag pattern until proven otherwise. If we look at the Qs and hourly chart, what do we see here? Notably a lot weaker than the SPY. But you look at the MACD indicator, the momentum is also shifting from bearish to bullish. We're not going to say that the Qs will go to the upside again without a closing above 446.58. Absent of that, you can gap higher, but can you stay higher? What if it is a gap higher tomorrow? And then we go down because of fears of the PCE report the next day. So unless you have a closing above 446.58, you're probably not going to take the upside risk. Likewise, you're not taking the downside risk until we erase and eliminate the bull flag pattern on the daily chart. That's not going to happen without a closing below the 20 days moving average. If you look at the E-mini futures for the NASDAQ, we can argue that this is a bull flag consolidation pattern. We can argue it is a double top for now. How do we resolve the dilemma? Well, obviously, if you go above the double top, then you no longer have a double top, and higher we go. The double top is confirmed if we lose the trend line, but better yet, we lose 18,121.5, then I'll be comfortable to say, okay, the trend is over. But we got to follow the theme of get the hell out of technology and the chips, maybe short them, and look elsewhere for opportunity, whether you're in the camp of the soft landing or the camp of the reinflation trade. If we look at the IWM small caps and hourly chart, what do we see here? Yesterday, in the show, I said, look, keeps holding above 205.49, but it keeps failing over and over and over again. I think it should be going down. Well, today, the managers disagree with me. They went all in buying the IWM and small caps in a big way. And they bought the components, so we have to look at the components to see which one is the strongest one, which one was responsible. Because believe it or not, when we see pops in the IWM led by biotech, those are usually strong and sustainable. But if we see pumps in the IWM led by, say, regional banks, usually those are not sustainable. So we're going to investigate in a minute, but the daily chart in the IWM, now going back positive on the MACD indicator, expanding the upper Bollinger Bands, never lost the 20 days moving average, confirmation, confirmation, confirmation. And now we can argue that it could be an inverse head and shoulder, but we have to investigate the components. We'll do that in a minute. Dixie, it's not going to be important tomorrow because we have no data. It's going to be really slow. But right now the bias is to the upside in the dollar. It's not bothering gold though. Gold and the dollar are going higher together. We talked about this scenario before in details. In stagflation, we could see the dollar and gold going higher together. Am I going to stampede and buy gold right now? No. Because there is still risk to the downside. The momentum is technically bearish if you look at the MACD. And maybe there is the threshold that if the dollar goes above, gold will freak out. But if you're a holder in gold, I would say stay the course. Keep holding. If you want to jump in and buy gold, I would say buy in increments because there is a chance we can go down, you get a better price on it. But at the same time, it's been consolidating and washing away this bearish momentum so far, which could be a case of missing out. That once the bearish momentum is over, we see a breakout in gold. You say, I wish I added here. The solution is you buy via increments. We'll look at the gold miners, GDX. Again, yesterday, looking at the MACD, looking at the behavior of the candle, I would have said we go down, revisit the 20 MA, see how it holds, and then take it from there. But immediately, we've seen demand in the GDX. We have a really good positive candle right now. So we have to look at the weekly chart. What do we see here, folks? On the larger picture, on the MACD, we see positive momentum. On the candlestick pattern, we see a retest of the 20 MA on the weekly chart, and then we see the stock moving higher. That's bullish. The RSI is firming up. So we do have concerns on the daily chart that maybe it is bloated, overbought, etc., etc. But on the longer time frame, the gold miners are still positive, and I think they go to the upper Bollinger Bands at around 32, 34. I'm not so sure about the SLV silver though. I think this one is losing momentum. I think it retested the 20, got a little bit of a pop out of it, but I think it's going to lose the 20 moving average. You look at the MACD, that's negative, the RSI, the Vortex, all getting into negative territory. I think in this case you want to go gold over silver. Then we'll look at UK oil, Brent oil. What do we see here? To maintain the prospects of an ABC breakout, we should not lose 85. We should close above 85 by the end of the week. If they do that, then oil is going to go higher. Now, the problem is with energy stocks. If you look at the XLE, way overbought, way overbloated. I would not say short the XLE right now. I'm very bullish on energy, but I would say maybe it is time to trim a little bit of your gains. And that's what I've been doing, selling covered calls, trimming a little bit. If I see a pullback, I'll use that as an opportunity to add more. If we look at the 10-year yield, what do we see today? A little bit of damage because we lost the 20 MA. Maybe this was the signal that the managers got, and they bought the KRE, they bought the IWM, the biotech sector. But you look at the weekly chart and the 10-year yield, it's not definitive yet. We're above the 20 weeks moving average. The MACD is saying it's a battlefield, and it's likely going to be resolved with bullish momentum on the 10-year yield. And if that is the case, you gotta be really careful with the so-called soft landing trade, which depends on yields going down. If you look at the XHB Home Builders daily chart, what do we see here? Talked about a bull flag pattern. Unless we lose 108.44, it appears that the bull is working out here, so you stay the course. Here's the IYR real estate. It was a bummer because if we held the 87 puts, we were so close of nailing a win on this trade today. But then they stuck a big one up our asses today with a huge pop in the pre-market. The IYR is up about 2% plus, closing above the daily moving average, 20 days moving average that is. And the momentum in the MACD, the RSI is improving a little bit. Now, I'm a little baffled. I'm not going to buy this move yet, and I'm really suspicious that's going to last. It doesn't matter really the trade is a loser, but is it worth it to reopen the trade for a longer expiration date? Here's what I'm looking at. The weekly chart for the IYR. We do have a lower high, and it appears that we're going to lose momentum sooner than later. Confirmation closing below the 20 weeks moving average, which hasn't happened yet. But if it does happen, then the downside picture resumes in the IYR, but we need a longer expiration date on the trade. If we look at the KRE regional banks, again, yesterday we've seen rejections on the hourly charts, and I said, look, I'm seeing a bear flag. I think down we go to 47.90 or 47.50. The managers today disagree. They decided to buy regional banks. And the biggest gainer in the components of small caps was KRE regional banks, which is not really that sustainable or a good sign for the rise in the IWM, because right now we do have resistance at around 50.04. If we begin to trade down tomorrow off the heated RSI on the hourly chart and we lose 49.66, we're going to have a confirmation for double top. Losing 49.66 from an hourly basis, we're going to have a double top, down we go, and maybe today was just a one-day wonder because of the inflows into the KRE. If we look at the VIX, we had a pattern of higher lows. Now we've broken pattern. I think this supports the market going higher into the end of the week, but are we about to see hedging because of PCE? I think that would be the interesting pattern. If we see the VIX going higher in the morning a little bit, while the indices say gapping higher or moving higher in the morning, maybe that's a warning sign that we'll see a pullback by the end, out of fears of we gotta have some hedging against the PCE inflation rate. Bitcoin Apple hourly chart, what do we see here? Demand showing up today. I think it is coming from the short sellers, to be honest with you. I think the short sellers made a profit for the quarter, shorting Apple, and now they want to rebalance the portfolios. They want to book profits from Apple and rotate otherwise. If that is the case, it could be a one-day wonder and Apple goes down again. But right now, from a technical standpoint, we had a bull flag, closing above 172. Then we have a break and a close above 173.12. That's a bullish sign, not a bearish one. But on the daily chart, can we still argue that if we fail tomorrow, it could still be a topping head and shoulder and down we go? The answer is yes. This is why tomorrow's closing is critical for Apple. If we close above the 20, once again, confirmation that we're going higher, confirmation that we don't have a head and shoulder. If we close below, could be a confirmation that we want to stick with the short side, because it might play out as a head and shoulder topping pattern. And down we go. How about the souffle Tesla hourly chart? What do we see here? It is just consolidating underneath 80. It couldn't really close above 80 on daily basis, but it is hovering over there. And we have to give it the benefit of the doubt that it might have the energy to crack above and maybe close above 180 on daily basis, say tomorrow. If we lose 175, we close below 175 for the day. okay, then we have a failure. But absent of that, you look at the daily chart. Yesterday it looked as an inverse candle, it looked as a bearish candle, topping candle. We're losing the 20 MA. But I said, be careful, folks. Maybe Tesla got dragged by the action that we got at the end of the day. You gotta assume that the risk remains to the upside, because the momentum indicators, the MACD, the RSI, the Vortex are all improving. And now we have a closing above the 20. So I think that the upside in Tesla right now is the predominant risk, absent of another daily closing below the 20 MA. We'll look at NVDA hourly chart. What do we see here? We talked about the head and shoulder. It did flush out, gave us a really nice trade. Now we see a bear flag consolidation pattern underneath 904.85. You take the shot and continue to be in the short side against NVIDIA. I'm leaning toward a rebound tomorrow, despite the bear flag. And the reason is, you look at the momentum indicators on the hourly chart. They appear to be bottoming on the bearish side, and they're about to change momentum back into bullish. Say that happens, and we see NVIDIA back at around maybe 924 tomorrow. Then it stalls and it comes down and it cracks below 904.85 maybe next week. Then we can argue that this is a larger head and shoulder pattern. Then we can short it again. But right now, I think we made enough VIG from that trade that we took yesterday, and you just gotta assume that it might rebound tomorrow. Here's the daily chart for NVDA. Can we argue for a double top, lower high? Sure. Can we argue for loss in momentum on the daily MACD? Yes. Because in the weekend video, the risk was, hey, we go back to bullish. But it appears that NVIDIA changed its mind. And now we see the damage on the RSI and soon enough in the Vortex. We got some support in the 20 MA. That could produce a lift by tomorrow. We see the name closing positive. But boy, if we go down and we lose the 20 MA tomorrow, Monday, Tuesday, then that's going to be a confirmation for the bearish momentum. And then we go to the lower Bollinger Bands. At that point, we can play the 800 puts. We'll talk about that when we get there. Let's talk about tulips, Bitcoin, hourly chart. Any change here? No, not really. I still see the risk to the upside. I can argue maybe if I want to look into a bearish look, maybe the rejection was a little too strong and we see an inverse ABC. But for now, we're not seeing it. And even if it happens, so long as we trade above 67,000, I think Bitcoin remains bullish. A little concerned on the daily chart though, that if we fail here and we close below 67,000, that it could be a confirmation of a lower high. And you look at the MACD, it might do the same thing that NVIDIA is doing, which is instead of changing from bearish to bullish, extending the bearish momentum. Usually when you see these kind of looks in any chart, they're succeeded with huge and steep corrections. You look at the proxies, Coinbase. If we see a failure in Bitcoin, or you get a short Coinbase with both hands, because today we got a negative catalyst from the SAC. If we see Bitcoin going down, Coinbase is going to flush big. And we might at the end of the day have the double top pattern. So I'm going to be eyeing Coinbase tomorrow. Mr., on the other hand, is a different animal. It's a casino table right now, led by options. If we see Bitcoin going down big, below 67,000, but preferably below 64,000, then I think we see big damage in MicroStrategy. But right now, it appears to be as a different animal at this point. When we look at Mara, the miner, we talked about maybe we're seeing some bearish outlook being played out here, but you gotta wait for the confirmation. The loss of 1988, because look at what happened today. We got a rebound, closing above the 20 moving average. Momentum is changing back to bullish. I would argue that the name goes higher if we continue to hold here. So the risk is now to the upside, not to the downside. This is why you always want to wait for confirmations before you shoot your load. But unfortunately, a lot of you don't listen. And I think you see from the examples that I give you from my own trades, when I ignore my own confirmations, the traders usually end up being a loser. So just understand that confirmations are really important. Let's move on to the conclusion of this video. What do we have on the economic calendar tomorrow? We begin with initial jobless claims. Then we have the second revision of the cooked GDP data. That comes on top of the Chicago Business Barometer. Then we have pending home sales, really important for the housing market, and the final reading of consumer sentiment. But most importantly, on Friday, while everybody's away and jerking off to the gains, they're going to bag you right away because we got the trade balance. But most importantly, we have the PCE rate, and then we have the big zombie Powell speaking. And those could be movers. So you got to have some hedging strategy before Friday, depending on the exposure you got. Anyhow, folks, this is probably going to be, again, the last official video of the week, of the month. We're going to have bonus videos. Apologies once again for being late. I'm feeling sick again, unfortunately, and it took me a little while to put this video together. But here it is. Hope you found it informative. If you did, please press the like button, subscribe, leave a nice comment in the section. Consider being a member here on YouTube or on Patreon. But once again, folks, this is all I got for you for tonight. Happy 25th anniversary of The Matrix. Enjoy the long holiday weekend. Maybe you want to watch The Matrix over the weekend. That's what I'm going to do. Thank you for listening. Thank you for watching. And I will talk to you again soon. Good night.
When you're inside, you look around, what do you see? Businessmen, teachers, lawyers, carpenters, the very minds of the people we are trying to save. But until we do, these people are still a part of that system, and that makes them our enemy.